Ready when you are.
Thanks, Jess. Morning, everybody. I had to check the time then. I don't know whether it's morning or afternoon anymore. So, morning, everyone. Thank you so much for joining this session today on making sense of funding and finance for your business. My name's Lynne Robertson, and some of you may have joined my session a couple of weeks ago, but if you didn't, I am the Enterprise Education and Insight Programme Lead for Santander Business Banking. It's a bit of a mouthful, but basically that means I do lots of work like this. I get involved in lots of business support, anything really that's beyond strictly selling products basically to our customers and prospects. So I do all the interesting stuff in Santander. And the session today is very much focused on, I guess I've put in this quote in terms of startup funding, but actually, when we're talking about funding and finance for your business, we're talking about it really at any stage of the development of your business idea. And it's quite obvious, but it is the money that you need to either launch or develop a new business, a new idea, a new product, a new service. And of course, it can come from lots of different sources. And I think sometimes people forget just how broad the sources of funding can actually be. I think we often think that it's either, well, I don't know, equity investment is the first thing that I need to think about. Debt would never be for me because I would never be able to borrow money for my business. So I want to try and demystify some of that today and to maybe get you thinking a little bit differently in terms of the sources of funding that you're looking for and when it might be the right time to actually apply and look for that funding. So that's what we're going to cover today. And few businesses can survive without some form of finance. So even those who, what we call bootstrap their company, so they might just keep putting in small amounts of their own investment, they're paying for their startup and all the resources that you need yourself. At some point, you're probably going to think, actually, do you know what? I'm going to put something on credit, or I could do with a little bit of grant funding, or I could do with a little bit of working capital, just to really help accelerate my idea and to accelerate my growth. So it would be very, very rare for a business to launch and grow without any kind of funding at some stage in its life cycle. So when we think about the startup funding, I think one of the places to start with is thinking about your reasons for looking for funding in the first place. And I think the reason that I wanted to put this in is because, do you need startup funding right now? Do you really need it? What do you really need it for? Is now the right time? Are you too early? Are you too late? Have you got everything in place to actually start having the conversations that you need to have? So what I want you to think about, and not just today, but just ongoing in your business idea, is thinking about what your business aims are over the coming 3, 6, 12 months. So think about your aims and objectives. Think about how much clarity you have in terms of what you want to achieve over that time scale and how you're going to make those objectives come to life. You need to think about your forecasts and your projections. So have you actually sat down and done a sales forecast, a cash flow forecast? How realistic are the forecasts that you've put in place? Are they really telling you what you need to know in terms of your future funding requirements? Have you accurately looked at your startup costs? Have you been very honest with yourself in terms of what do you truly need to invest in to enable you to open the doors and start trading? So are you actually looking at a bit of a wish list? You want brand new, you want lots of top end equipment, you want to invest in premises, you want to get a big team involved from the beginning. Is that necessary? And if it isn't necessary, what can you start to strip out? We'll explore that a little bit later on. Think about the difference that the money is actually going to make to your business. Do you know what you would do with the funding if you received it? And I've heard lots and lots of horror stories about businesses who managed to secure quite significant amounts of funding and then they burn through it because they've never really thought about what impact this funding will actually have on their business? And have you researched thoroughly the range of funding options that are truly available to you? And I think this is what we want to try and cover today, is just opening your mind up as to, do you know what, it's not just equity and debt. There are other things that I could consider. Might take a little bit of time, might take a bit of legwork, but there are other options out there. Thank you, Jess. And that will then lead you to making a decision on, actually, do I really need this funding now? Maybe I don't need it. Maybe I don't need as much as I thought. Maybe I need more than I'd anticipated. But by asking yourself these questions, you'll start to get your own clarity in terms of your funding position. So the first thing that we normally start with is not going straight to equity investment, which I think is what we often hear. When we hear the word startup, I think we often assume that that means you must go immediately to find an investor. So the first thing that I want you to think about are those what I've called internal funds. So this ability to self-finance your business idea. And it is one form of financing that most startups will use at some stage. And I guess there's a big takeaway from this, which is, if you don't demonstrate that you've got a bit of skin in the game and that you've got the confidence in your own business to risk something, is anyone else going to take that risk? And I've seen lots of startups over the years who just assume that because funding exists, it means that you should get it. And I'm always like, well, but what are you risking? What are you putting into this? It could be sweat equity. It could be that you can demonstrate the time and commitment that you've put into your idea to develop it and get it to the stage it's at. That to me would show commitment. It would show your belief in your idea. And bootstrapping, so putting small amounts of funding in as and when you need it, so you're growing quite organically. And what we call friends, family, and fools. So this idea of going to those that are closest to you, because they may want to support your ideas, and they will probably not expect the same in return as a classic investor. They may still want something. They may want some equity. They might want you to repay the money with a little bit of interest, but actually mostly they want to support you financially, and at some point they want to get that money back. So it can be a really good source of those initial funds. And of course, if you're really smart, you can think about how you can start to generate early revenue through potential customers. You might have the ability to generate pre-sales. So perhaps you want to look at using a crowdfunding platform, for example. Not only will it validate your idea, but it will start to generate revenue that you can put into, for example, a first batch production of a product. So this idea of starting to generate sales as early as you possibly can. It might be that those sales come through a slightly different product or service. You might be in a sector where you're developing something new, but you want to sell your consultancy while you're developing your idea, for example. So think about how you can generate sales early. I get very frustrated with startups, especially, who don't seem to make any effort to sell anything, because they put all of their time and effort into just securing their funding. And I always say, look, selling and generating revenue and building customers builds far more traction and far more equity into your business than just sitting back and waiting. So I'd really encourage you to think about how you can generate and demonstrate these internal funds that you're going to put into your business. Then, of course, we can start thinking about equity finance. And I think, you know, thanks to the kind of the Dragon's Den, which is in whatever, it's like 18th year or something now, isn't it? I think there is an automatic assumption that when you're a startup and you have a new idea, this is the route that you must take first. And I would say just hold off on that immediacy, because if you're looking at your internal funds, you're looking at other sources of finance, there is probably an appropriate time to think about equity finance in your business. And of course, equity is all about taking some of the ownership that you have and exchanging that with somebody for money, or even better for money connections, industry insights, so what I would call smart money. So equity finance could come from business angels, so those who are, high wealth individuals who are keen to support and make small investments into interesting startup and growth ideas. Venture capital, that tend to be the slightly larger organizations and the vehicles that will take some of that business angel money and look more broadly to make investments. Crowdfunding, as I've mentioned, absolutely amazing source of finding potential equity investors, because if you pick the right crowdfunding platform, they have the audience that you probably don't at the moment have. So if you think about looking for an equity investor as a little bit like dating, to be honest, you're going to have to meet a lot of investors to find the one that's right for you. Using an existing platform, they're doing a lot of that legwork for you. And of course, the government is trying to incentivize people to encourage us to invest more in businesses. So as an investor, if I decided to support a startup, there's a tax incentive for me to do that. So my money is not fully protected, but pretty much protected if something were to go wrong with the company that I'm investing in. So equity is a really attractive form of finance, but of course it comes with its pros and cons. So you are able to probably bring in more investment than debt might enable you to. So with debt, we'll come on to that, you're probably going to be restricted by the funder that you're approaching and by your both personal financial circumstances and your trading track record. So investors aren't looking necessarily at the same thing, so you may be able to bring in more money. You're not meeting interest payments, so you don't have that monthly outlay to repay as you would do with debt. But of course, you are having to think about how you exit that relationship at some point in the future. So you might not be making ongoing interest payments, but you're giving away equity in your business, and at some point your investor will want a return, excuse me, on that investment. If you do it right, you might be able to find, as I mentioned, that smart money. So to find both investment, but also expertise, connections, influence, industry, experience, etc. And that can be invaluable. You're not going to get that from taking debt into the business, for example. And even from friends and family, you're not going to get that knowledge and insight. So if you can find the right match of an investor, you can gain all of that additional added value that comes with that money. And of course, good investment partners can help create greater credibility in your business. And you'll know all the, the pre-seed, the seed funding, the Series A, etc. Getting the right investment partners on board can make those further funding rounds go more smoothly because you've built in confidence into the business because of the investors you've already got in place. On the flip side, it can take a heck of a long time. So this is not a route to go down if you need quick working capital into your business. You're talking easily between, I've said here 12 to 18 months. I'll probably say a minimum of kind of 4 or 5 months to get an investor actually on board. You're going to do your due diligence. There's going to be lots of going backwards and forwards to agree on the deal, basically. It's not a quick fix. So if you are looking at equity investment, you need to start well in advance and start planning how you're going to go around doing it. You will give away some of the decision making in your business, of course, because your investor may want lots of input. They may want to take a back seat, but they're still going to be asking you many more questions in terms of your goals, your decisions, your data, your how you're tracking customers, all of that kind of management information you're going to have to be prepared to share. We have seen conflict between founders and investors. I talk a lot about the importance of being really honest around your values and your ethos when you're talking to people who are going to be buying into your business. Because if you don't share those same values, there's a real danger that you'll start to pull apart. And it's very difficult. I mean, it's almost like a marriage, that to get out of an investment relationship is a lengthy process. It's not going to be easy to do. So think carefully in terms of personalities, ambition. Do you all want to take the business in the same direction? And the process of looking for equity investment, because it takes so long, can really distract you from actually just selling your product or your service. I've seen so many businesses who've sold nothing because they've put all of their efforts into trying to seek investment. So a few things to think about if this is an avenue that you're considering. Next thing to consider is debt finance. So obviously this is an arrangement between a borrower and a lender. I couldn't join from Santander and not talk about debt finance. So it's a capital sum that you're going to borrow from a lender. You're going to repay that money with interest over a fixed period of time. And at some point, you will make that repayment, and that's it. The debt is done. And that lender doesn't have any further involvement in your business. And there's different ways of thinking about debt finance. And actually, the simplest one is thinking about overdrafts and credit cards. So kind of short-term debt, credit cards in particular, you use it as and when you need it. Can be great in the early stages for buying any kind of initial equipment, any initial stock that you need. But again, and thinking back to how smart you are about your projections, you need to be confident that you can make those repayments. Missing repayments on debt is a really, really bad thing, both personally and for business, because it starts to show that you're not able to manage your finances, and that sets alarm bells ringing. So just make sure if you're thinking about debt finance, you are really serious about your confidence in being able to repay that debt. And then, of course, we have things like fixed term loans. The one that I always flag with startups and anyone less than 2 years trading is the startup loan scheme. Government-backed scheme, 6% interest, fixed, doesn't matter who applies for it. Comes with a bit of additional support in terms of mentoring, business advice, etc. And you know that over the period of usually 5 years, you will have repaid that loan. And as your business evolves, you can start to look at larger sums of money as well through a fixed term loan. And then there's other things like asset finance, invoice finance. So asset finance, it could be that you're needing to acquire some quite expensive assets for the business. So instead of paying it outright, you would get the finance to support that. And then you can also think about things like leasing equipment, etc. And convertible notes I've put on here because they're a little bit of a halfway house between equity and loan. So they would start as a loan, but then convert to equity later on once you've hit certain milestones, which you would agree with your funder. So debt in itself is quite complex. It's not just, I'm going to borrow money, I'll take out a loan, or I'll get an overdraft or a credit card. There is a little bit more complexity around it. But again, comes with pros and cons. The benefits, you've got monthly installments, you're paying it over a fixed period of time, so you know exactly what that commitment is and you can build that into your projections. You're not giving away any equity in the business, so you're retaining that control. And once you've paid back that debt, that's the end of your liability. But repayment is always a requirement. Repayment is expected. No one's going to lend you money or provide an overdraft or provide a credit card if you're not going to be able to repay it. So that's one of the critical things. And there is liability that comes with that. So even if you're a limited liability company, a debt provider can still pursue you potentially to try and get that debt if you've given a personal guarantee, etc. So it's not always kind of as safe and secure as you might think. There is a risk that you take too much debt, and that starts to have an impact on profitability. It has an impact on how you're viewed for future debt as well. Lenders tend to have really strict lending requirements. So you need to be able to demonstrate, usually you'd have to share your credit history, you'd have to share your trading history. You know, you're having to share a lot of information about you and your business to meet most lenders' requirements. And financing terms can sometimes change. This is more likely with likes of overdraft, credit cards, those short-term facilities. So interest rates can shift on them. So again, there's a few different things that you need to weigh up, and you need to think about your own appetite for risk. How comfortable are you taking debt into your business? I took debt into mine many, many years ago. Didn't really think about it. Wish I hadn't, but probably wouldn't have been able to develop the business the way I did without having had that money. And this was before the days of everyone just go out and get equity investment. I never really sat down and thought about the implications of going into this debt agreement. So it's something that you need to think carefully about. The social investment side of things, so just making sure that you are, if you're a social enterprise or doing something with a kind of purpose at its heart, that you're thinking about the sources of finance that are available to you, and they are available. So just because you are a social business doesn't mean, for example, that you couldn't get investment into your business. So I think sometimes we think that as a social enterprise, we can only secure grant funding, and that isn't the case at all. We can definitely look at other sources of finance. It's just, educating yourself about that. So things like charity bonds, there are specific providers that can provide those. Crowdfunding is probably one of the first kind of alternative forms of finance that went to supporting social enterprises and purpose-led businesses. You can get quasi-equity, so there are social investors who want to support you because they believe in your ethos and your values. They will want a return, but not at the same level that you would find in regular equity investment. So that's something to consider. And social impact bonds, I'm going to be honest, I don't know enough about these to be able to go into detail as to what they are. Search social impact bonds. It's a mechanism that you will have to repay, but again, you're a little bit protected because of the purpose-driven aspect of your business. So don't think that if you are a socially driven, social enterprise, profit-driven business, that you can't look at forms of investment beyond debt, because you definitely can. Then we have alternative finance. So I kind of put that in inverted commas, and these are typically the finance channels that are beyond the traditional banking system. And I've put a few different things down on here, and I've included social investment because that is seen as alternative finance. But looking at things like research and development tax credits, it's one of the great government schemes that very few businesses actually fully understand or tap into. But if you're doing anything that has an element of innovation, then you should really explore the R&D tax credit as an option. And it can either take money off your corporation tax bill, or it can give you cash back into your business. So it's not a quick way. Again, it's not going to quickly support your working capital. But if you can get into a bit of a role with how you claim it, when you claim it, you know then that you're going to get potentially money coming back into the business. And it's, it's free money basically. So why would you not want to pursue that? Similarly, business grants. Now, business grants over the past few years have become few and far between, but there is still grant funding available. A lot of it will depend on many, many different factors. So things like your sector, your geography, so where's the business based, sometimes your age, whether or not you are a profit-led or a purpose-led business, whether you've got innovation at the heart of what you do. All these different factors would have an impact on where you could get grant funding from. But there are a couple of really good online directories where you can search for grant funding. If you just do an internet search for business grants, I think the gov.uk website has a list. There's a site called Funding Central that you can look on. You can put in your sector, you can put in all that information. And it will help generate sources of business grants. Again, they're lengthy to apply for. It's not a quick fix. I've had startups who've spent months applying for I don't know, an Innovate UK grant to then not get it. And while they've been putting all of their effort into applying for that funding, they've really not thought about how to keep the business developing. So again, don't rely on it. Don't assume that that funding is available, but look for it. If it's out there, go for it. Because of course, the joy with grant funding is you're not repaying it. You may have to demonstrate other impact, and you will probably have to give some kind of return to your grant funder, but you are not having to repay that money. Microfinance I've put in here, partly because, I mean, microfinance can be a combination of grants. You can get microfinance that's debt. Basically what it means, it's a really small amount of money to kickstart your idea. We have an amazing scheme in South America. So our colleagues that run a project in, I think, Brazil and Chile, and it's microfinance for women in business. And they are no more than, I think, $1,000 that we will lend to a woman in business to enable her to get her idea off the ground. Now, I know the economic conditions are completely different, but the impact of that level of trust, that small amount of money to enable somebody to get across that first hurdle of starting their business can be enormous. So never think that smaller amounts cannot enable you to achieve what you want to achieve, because they can be really powerful. And there's kind of voluntary organisations. I'm involved in one called the Awesome Foundation, and we gift £500 a month to people who've got great ideas. And there's lots of these kind of little microfinance pockets around the place. Again, worth doing an internet search for them. Community finance, this tends to be organisations who are set up and funded specifically to fund individuals and businesses who can't get funding elsewhere. We used to call them lenders of last resort. I don't particularly like that title, but they do tend to be lenders. It does tend to be debt, who you could go to if you can't secure funding elsewhere. So I used to work for a women's economic development agency, and we had a fund that was specifically for women in business, and it was specifically for women who got declined from high street banks. So part of our eligibility was that you could evidence that a bank had actually turned you down for a loan, for a business loan. And there continue to be community finance organisations around the country. And again, they would look at different things like sector, age, geography, gender in some cases. But they're worth looking into because they can provide a gentler source of funding. They normally come with business advice and support. They normally will give things like repayment holidays. Interest rates can sometimes be a little bit higher because they seem to be taking maybe slightly more of a risk, but they're definitely worth looking at, worth looking into. So that's kind of the alternative finance that we're thinking about. And, you know, do your searches, get online, get on those business grant platforms and see what's available to you. You'll be amazed at what's kind of tucked away that isn't necessarily, you know, publicised and broadcast. And of course, I've got crowdfunding on here. I've mentioned it several times now, but I think crowdfunding is a great way of tapping into both validation from customers and ways of generating revenue very, very early on. So obviously we could do a whole session probably on crowdfunding. You need to think about things like, you know, are you selling a product? Are you selling a service? Are you a charity? You know, what's the funding for? And then you'll find the right crowdfunding platform to suit those needs. So those are the things to consider with crowdfunding. I've just noticed there's a couple of things coming in the chat, so I'm just going to check that everyone is okay. Murat, you've asked if there's a piece in this covering business proposal to request for funding. Not specifically, but I'm sure we could help you with that after the session if you wanted kind of a structure in place, etc. So let's revisit that when we get near the end. So thinking about if you're funding ready, and we touched on this partly in the previous session, but I want you to think more broadly now in terms of just knowing when is the right time to go and look for the money that you need. And it does involve things like looking at your management team, thinking about the experience that you have. How good are you with cash? Like, are you confident with money? Because it is something to think about. If you don't have that financial knowledge and those financial skills, is it worth trying to bring them into the business before you start looking for funding? And I would suggest it probably would make sense to do that. Take the time to make sure that you are that you've done the homework that you need to do before you go out and start asking people to fund your idea. And again, I think there's this misconception that for startups, as long as you've got what you perceive to be a really good idea, you could take that to an equity investor and they'll chuck 250 grand at you before you've had to do any research. You really need to go and evidence that you've got an actual solution to an actual problem. And if you don't do that, whether it's equity, whether it's debt finance, whether you're looking for a grant, you have to evidence that there's validation and that there's the potential in your idea. So if you were to come to a bank, we would look at track record. We would look at what trading have you already done. And if you have made no sales, it's going to be really difficult. High street bank right now to lend you money because there's nothing to show us that what you're doing is viable. There's nothing to demonstrate to us that you're going to generate revenue which you will use to repay your debt, because there's no track record, there's no traction there. And I think you really need to think seriously about how you generate those early sales before you start talking to those different funders. Really think about how you've proven that someone will want to pay you for your products and your services. And if you can't do that, you could think you've got the most amazing idea in the world. But if you can't do that, it's going to be very, very difficult for you to actually convince anyone to put funding into your business. And I can't stress that enough, honestly. Just focus on validation, focus on sales, get that money coming in, and you're building value into your business in that process. Think about your revenue model in particular. How are you making money? Because if you're clear on your revenue model, you're clear then on how you're actually repaying that money to your funder. So I want you to think about, going back to my comment at the start about your forecasts. Have you done a sales forecast? Have you done a cash flow forecast? What different revenue have you got coming in from your different customers? What different products and services are driving different revenue? What is the flow of cash through your business? Is your pricing appropriate? Is your pricing enough to cover your costs? And if you can't demonstrate that knowledge and that insight into your own business and your own products and services, no one's going to have the confidence to put money into this. So I really want you to think carefully about how much you understand about your own financial model for the business before you go and talk to other people. And again, I mean, I hate constantly referencing Dragon's Den, but for this, it's quite good to watch, because those horrible cringe moments when one of the panel will ask somebody to explain their profit margin, to explain their cash flow projections, to talk about their sales projections, and that individual crumbles because they just don't know that information. And you need to know that. And one point I'd make on this is, if you are getting support in writing a business plan, and let's face it, you're probably going to need a plan of some description to be able to access funding. make sure that you are writing that plan and that someone isn't writing it for you, because if you're presented with a set of financial forecasts that you haven't had involvement in preparing, you're really not going to understand them. And it's really important that you understand every single figure that's on that forecast. That just builds on that, building your financial model, and then building into that, thinking about what you're going to use that funding for. Now, I mentioned earlier, thinking about startup costs. It's easy to turn your startup costs into a massive wish list of things that you'd really like to have. I want the latest equipment. I want the newest equipment. I want the biggest premises. I want a huge team. I want a new vehicle. I want, you know, whatever is on that list. And I would really revisit that and strip that back. Strip it back to what's the bare minimum that you really need to be able to be trading. So, you know, do you want to spend £10,000 on a really amazing e-commerce website? Or actually, could you go to Squarespace, get an e-commerce plugin and spend about 50 quid a month, probably, roughly, on really doing the same thing, but doing it in a way that means that you can adapt, you can evolve, you can make changes, you're not having to rebuild a website. So think about, be really honest with yourself about those kind of things. And also when you're thinking about your financial model, think about, if you are considering equity, how much are you prepared to give away? Because, and again, you know, we see the classic thing of, well, I want, I don't know, £50,000 in equity in investment, but I'm going to give you 5% of my company. But I've not started selling anything yet. You're putting a huge valuation on your business. You're not going to get that from someone. On the flip side, when you're very early stage, there are lots of investors out there, unfortunately, who will think that, well, you know, you've not yet built value into your business, so actually I want half of your company for not a huge amount of money. Don't rush into those kind of agreements, please, because you'll really struggle to get out of them, and it's going to have a hugely detrimental effect on your business in the long run. So you need to talk to yourself and to your team about what you're prepared to do and what you're prepared to give up. And get that early traction. So I don't need to kind of go over this again. I think you get my point that you really need to get out there and make those sales. So the things that you need to do, like we've got all of these different funding and finance options, okay? And there's all these different sources that you may or may not have considered before today. Start to just ask yourself some of these key questions. And one of the first things is just your own relationship with money. So I'm not saying here that you need to be really miserly and that you need to be so frugal that you can't actually achieve what you need to achieve. But it's being sensible with the funding that you have available to you. And if it was your own funds, you wouldn't fritter that away on things that weren't necessary. So why would you do that with funds that came from someone else? So I want you to think about how you can be lean in what you're doing. That goes back to my comments around your startup costs. How you can make sure you've done your research, focusing on doing one thing really, really well. Don't try and do too many things at once. Think about the digital tools that you can use. So again, the e-commerce, the website is a great example. When I had a business many, many years ago, and it was before Squarespace, GoDaddy, none of that stuff existed. It was going to cost me in the region of £40,000, I think, to launch an e-commerce site. I was in the fashion industry, and I couldn't make that investment. I didn't have £40,000 lying around to do that. And I'm so jealous that now you are able to, literally by the end of lunchtime, you could have set up a website with e-commerce functionality, with some products on it to start selling, and for the cost of, like I say, 20, 30, 40, 50 quid, amazing. So think about how you can use technology that's available now to help you save money, to help you do things faster, and use those digital tools. And keep your eye on your cash flow. Do not for any moment take your eye off what your cash flow is doing. How much money is coming in, how much money is going out, what's your bank balance, who do you owe money to, who owes money to you, have you got to put money into stock, is that going to tie up your cash? Be managing that on a daily basis. Do not pass off your cash flow management to someone else, like a bookkeeper, to someone who's that little bit external to the business, because you've got to keep your eye on that. You really need to know day in, day out what is happening. So I'd really encourage you just to develop this money mindset. Think about the timing. So think about the stage of business that you're at. So if you're an early stage startup, you might have just written your business plan. You've thought about your startup costs. What is going to be the right source of funding for the stage that you are at? How quickly do you need that funding? Have you got any revenue in place, for example, to start making debt repayments quite quickly? Is it the right time for you to give away control in your business? Or actually, are you too early a stage and you're still developing your ideas? Do you know what runway you've got? Do you know how long the cash you currently have is going to last you? Have you kept your eye on that cash flow situation? And don't think that you could, I don't know, let's use debt as an example. Go into a bank today or phone up a bank or go online, whatever, and expect that you will have money in your bank account tomorrow. It just doesn't happen. And I don't care what anyone says, it doesn't happen that quickly. So don't leave it to the last minute to try and get the funding that you have worked out that you need, because it will always take longer than you think. So please don't leave it to the last minute. Build it into your strategy, build it into your timeline, build it into your aims and objectives. Build in the time to do the research to make sure you're finding the right type of funding at the right time, and give yourself plenty of time to secure that funding. Some are quicker. Startup loan scheme, for example, relatively quick, but they will need a business plan, they will need forecasts, they will assess your idea. Yes, they're more likely to take a risk if you're very, very early stage or you don't have trading history, you don't have track record, but it's still not going to be an overnight decision. Take something like an Innovate UK as was grant, could take 6 months. Real investment into writing that application, no guarantee that you get the funding. That's a big, big commitment. Back to my comment about equity investment, could take you easily a year to secure that funding. By the time you've found the right investor, gone through your due diligence, come to the right agreement, that's not money that's going to appear overnight in your bank account. So do not leave it to the last minute. And I know from speaking to colleagues, we get really nervous when somebody comes to us and says, yeah, I want to borrow some money. Just tell me how much I can get and how quickly can I get it. And that is an alarm bell ringing. That is saying this is a business that's probably either in a little bit of trouble or they've not done their planning. And so we really, really would encourage you to build this into your timeline and to build this into your strategy. Make sure you know your co-founders. So really think about, if you've got team members, do you know about their personal factors and their credit history? Have you had a conversation with them about their credit background? And you might sit and think, oh, I don't want to do that. That's not a conversation I want to have. I'd really encourage you to do it. I've had companies that I've worked with who have had one partnership in particular, met them together, yet seemed to be completely in tune in terms of what they wanted to do. Met with them individually, a few alarm bells started ringing. We started to talk about funding, and one had a real appetite for, or a real tolerance of risk, and the other one was really against any kind of debt. again, alarm bells start to ring. And it turns out one actually had a lot of personal debt already and had not told his new business partner about it. And that business failed, funnily enough. They went their separate ways. They realized very quickly that it wasn't going to work because they hadn't had that conversation and they hadn't had that honesty. So please make sure that if you have got co-founders, that you're really honest with each other in terms of your own personal situation, but also what your appetite is to different types of funding, what you'd be prepared to give away in terms of equity, your commitment to the business. All of these different factors, have the conversation now, not in 6 months' time, because by then it's possibly too late. Think about what's driving your funding. Really consider why you're looking for funding in the first place. So it's not a case of, well, I'll see how far my money goes, and then I'll borrow some more, and then I'll get a little bit from here, and then I'll get some equity. Really think about what's driving your need for funding. That's the purpose of it, because the purpose of it may dictate what type of funding you look for, and the timing of it, which we've covered, the amount that you need. Don't turn up at a bank saying, how much could you give me? You need to come saying, I need X amount of money to enable me to do X, Y, and Z. Your creditworthiness, your credit history, your track record, the confidence that you've got in your forecasts. And I'm a big advocate of do a worst case scenario, a best case scenario, and a middle case scenario when you're doing your forecasts to paint a picture as to if things don't quite go to plan, what's the financial impact? If things go better than planned, great. Does that mean that actually I might be able to repay debt faster, for example? So think about how you can bring your forecast to life. Think about your growth ambitions. Think about your exit strategy. Now, you might be sitting thinking, I can't begin to think about my exit when I haven't even launched my business yet. But it's important to think about that. You know, what is the long-term objective from what you're doing? Chris, I'll come on to your question in a second if you don't mind. And think about your risk tolerance. So if you just think, do you know what, I do not want that scenario where I have that liability of debt, then maybe that is not the route to go down, and you will have to think about your other options and be honest with yourself in terms of that tolerance. There was a question just popped in from Chris. Will these scenarios apply for buying, renting a premises? Yeah, pretty much, Chris. I mean, I think you need to weigh up the pros and cons of buying versus renting. And really, obviously, at the moment, depends what sector you're in. Would you want to be making that financial commitment in either respect? I mean, obviously, buying gives you the asset, so there's a benefit of that. Renting gives you the ability to actually, you know, cease that agreement at some point if things aren't working out. So, but the same things apply. You know, timing. It's not quick to get a commercial mortgage in place to buy premises. Neither is it quick, probably, to get a lease agreed, to be honest. And so you need to consider all these things, because ultimately what you're going to look for is funding for an asset. So the same logic would apply. I hope that's okay. So then you can think about, are you ready to get the funding? You know, you've considered all of these different things. And the key thing for me on this is that you have looked at the range of funding options that are available to you. So you're no longer just thinking about one source of funding. You're looking at that whole suite of options, because it may be that actually you put a bit of a jigsaw together. You might have some of your own money that you put in. You might borrow a little bit. You might have a credit card. You might have asset finance. You may take a little bit of equity to begin with to kind of get a sense of how that's going to work with you. You might be able to get some grant funding because of the nature of what you're doing. And that will give you a suite of funding that will enable you to achieve your objectives. And I think it's probably very rare to find a business that has one source of funding. Most that I come across do have this kind of pick and mix approach, because they're looking for the right type of funding for the right thing at the right time. And that's going to evolve as your business evolves. So just, yeah, be really clear on what these next steps are and give yourself the time to actually go out, do the research, and to secure the funding that's right for you. So we can take some questions now. I mean, we could probably do an entire day. We could do an entire day just looking at the pros and cons of debt, to be honest, which actually in retrospect doesn't sound like a terribly interesting session, but there's so much more that you need to think about. By all means, get in touch with me. I'm going to be off for the next few days, actually, but by all means, drop me a note and we can pick up after this session. You can get some information via the team that I'm in at Santander, which is Santander Breakthrough, so you can have a look for that online. My colleague Damien Mullaney, who's part of our universities team, is also available. He's connected with Jess, so he will be able to pick up any questions. And yes, we'll share this presentation and the slides with you so you can go back and make notes and just kind of check your own reflections. So I hope you found that useful. We've got 3 minutes. So Jess, I don't know if we've got any final questions coming in that we want to pick up.
Yeah, of course. Thank you so much, Lynn. That was really engaging and interesting session. So I hope you've all learned something from this. Yes, all the slides and recordings will be sent out after the session for you to view in your own time. Does anyone have any questions for Lynn at all at this stage? We have got a little bit of time left if anyone wanted to ask anything. I know
everyone's deep in thought.
Yes. Great. Thanks for that nice feedback, Murat.
Yeah, that's good to hear. I think my takeaway, Jess, would be, and for all of you on the session, is to just not be intimidated by the options available to you. Chris, is there a place to go to research the pros and cons of debt? I would have a look at, if you look at, I think it's UK Finance, Chris has some really good guidance on it in terms of funding, and also the British Business Bank, I think, has some really good content in terms of the types of funding available to you. So Chris, I'd have a look at both of those, UK Finance and British Business Bank. I'd have to check to see if I've got any links that I could share. But again, if you do some Google searches, I think they will start to get you to think a little bit more deeply about the debt side of things. And Murat, yeah, happy to pick up with you later. If you want to drop me an email on that email address, and we can catch up next week.
Thank you very much. Just before everybody leaves, I have included the programme of events for the next few weeks, actually, and you can also sign up on our Eventbrite link. Murat, have you got that email okay, written it down?
Yeah, looks like it.
Amazing. Do you think we should prepare?
Email?
Hello?
Yeah,
did you get Lynn's email? Have you managed to write it down okay?
Yes, I'm writing down right now. Thank you very much.
Fabulous, fabulous. Do you think we should prepare all the financial plans, even the backup plans, and present them to sponsors?
Good question, Sharifa. How much do you want to share with the funders that you're approaching? I think I mean, when I say do a kind of worst, best, and middle case scenario, I would probably give them your kind of, this is the kind of average scenario that we're looking at, but have in your mind your best and worst. So be able to have that conversation with your sponsors in terms of, well, I've kind of considered that if I needed to lower my pricing, this is the impact it would have. If I don't know, if it took me 3 months longer to secure my first contract, for example, this is the impact it would have. So I don't think it's necessarily a case of going, here are 3 different financial forecasts, have a look at them. I think it's how it equips you to show the complexity of your understanding of your finances, if that makes sense. So it's really about You know, you've got all the answers for those hard questions that you know you're going to be asked. You've prepared yourself for them. That's the approach that I would take. Have them in your back pocket, ready to reference.
What are your go-to websites and resources to follow this topic up?
Oh, gosh, what are my go-to websites? Now there's a question. There is one called, now I'm literally going to go online as I'm chatting, so just bear with me while I just do a quick search. There is a site called, and I think it's the Path Forward. Just checking that I'm giving you the right URL. Is it the Path Forward? Oh, it's not. I'm going to have to find this, Jess, and share it with you. There's a website which I find brilliant with articles on funding. I mean, it covers lots of different topics for startups, but they have a lot of wealth about funding, and it's written and provided by an equity investment company. I'm just trying to remember. That's going to really bug me. I'll need to remember the name.
Yeah, if you remember, Jennifer, we can include it in the email when we email out the recording and the presentation.
Here we go. I found it. Let me just stick it in the chat. There we are. Pathforward.io. It's great. Really, really good website, Jennifer. Maybe a little bit tech focused, but actually most of the content is relevant regardless of sector. I just think it's really useful. They've got some great stuff on there around things like doing your due diligence, how you do evaluation on your company, all that kind of stuff. So I'd start with that and see how you get on. And looks like that's it, Jess.
Great, thanks so much, everyone. Great turnout, and I hope that was really helpful for you all. Anyone that ended up joining late or had a few difficulties, you will be able to access that recording. We might not be able to send it out today, but you will receive that at some point this week, hopefully. Has anyone got any? No worries. Any last minute burning questions before we bring the session to a close? Thank you, Crystal.
Thanks, Crystal. Well, best of luck, everyone. I mean, like I say, you know where I am. If I can't help you, I'll point you in the direction of someone that can. But yeah, just honestly, best of luck. You've got this far, so
yeah. Well done, everyone. Yes, there is another session with Santander coming up, which is Making Sense of Business Banking. That's on the 26th. I will just pop that link in here. Murat, there isn't one from Santander just yet, but we do have one through the university about finance and funding. I'll just grab that link for you as well, and that's on the 26th as well. But like Lynn's
so much great content, Jess. It's brilliant.
I know.
Great that you provide all of this. Really good.
Been working hard, very hard. Go on, Emma. Sorry. Oh, Emma, I think your microphone's just popped on mute. If you had a question. Emma, did you have a question for us at all? I did hear your microphone come on briefly.
Nope.
No. If you do manage to think of the question, Emma, you can always email it to launch@salford.ac.uk, or you can email Lynn, whichever you think would best suit your question. And we hope to see you at plenty more events in the future as well. So make sure you check out that programme, and you can also follow us across social media for any updates. And when we've got future Santander opportunities coming up, we always post those on our social media accounts as well. So just search for Launch at Salford Uni and you should be able to find us. So thank you, everyone.
Thanks, everyone.
Bye. Bye, Crystal. Thank you, Maura. See you soon.
Jess, I'm going to leave if you don't mind. And I've got another call. It just doesn't stop, does it, at the moment? So
I know, constantly on it. That's fine. I'll wait till everyone's dropped out just in case there's any last minute questions. But thank you so much again. I'll send you the recording as well and hopefully speak to you soon.
yeah, talk to you soon. Thanks, Jess.
Great.
Take care. Take care,
Have a
everyone.
great day.
Bye.
Bye.